Good day. I greet you and I thank you very much for choosing this channel. I thank you very much for tuning in to this channel. We are still continuing with our chart pattern series. I believe this is video number 6 of our series that we've been covering, and we are on the last category, which is triangles. We are covering or decoding codes, or I am going through on how to best benefit from trading chart patterns. If you did not watch the previous videos, they are available in the description, and we are looking at entry, we are looking at exit, we are looking at how to benefit and profit by trading forex chart patterns. My name is Mohomuti. I also go by the name Proqnosiz, or you can call me Alpha Wolf Forex. So without wasting any more time, I say please do not forget to subscribe to the channel, and for all those who have subscribed, I thank you very much. Remember, it is not about numbers, but it is about growing our reach to cover as more people as possible. This is Currency Market Execution, your channel with a difference, where we cover everything to do with forex, everything to do with trading, everything to do with education and improving your trading skill. We are all about improving, and we're all about making money in this channel. So if you did not yet hit that bell, make sure you do so that you can get notifications whenever we drop a video. And we always give giveaways in the description. Sometimes I don't mention it, but it is always in the description. So make sure you go through the descriptions, because everything that you talk about, we always leave the links in the description, and the giveaway and the promo codes and whatever that you're giving away each and every video is available in the description. So without wasting any more times, let us go into today's lesson. We have started this long series that we have covered in over 6 videos with our 3 categories of chart patterns. We have reversal patterns, which we covered on previous videos, and we have continuation patterns, and then we also have bilateral patterns, which we are covering now. So what are bilateral patterns, and what are we going to be covering in this category? We're going to be looking at ascending triangles, we're going to be looking at descending triangles, and we're going to be looking at symmetrical triangles. So let us go right into it without wasting any more time. Again, if you did not yet subscribe to this channel, please hit the subscribe button so that you can be notified whenever we drop more of these informative videos that we drop, and also hit that like. It does help us a lot, and it is your way of supporting this channel by your thumbs up. Thank you very much. So what is a triangle pattern? Triangle patterns are aptly named because the upper and lower trend lines ultimately meet at the apex on the right side. So connecting the start of the upper trend line to the beginning of the lower trend line completes the other 2 corners to create the triangle. The upper trend line is formed by connecting the highs, while the lower trend line is formed by connecting the lows. So how do you identify, or how do they look like? They look just like this. So symmetrical triangles, you can see right here. And remember, even though you see it here being a breakout on one direction, symmetrical ascending and descending triangles are bilateral patterns, which means that the breakout can be either way. It can be to the upside or the downside. This is just an example of how they look like. Remember, in the previous video we covered pennants, and then we covered this part here, how you would see a pennant that it has a flagpole, whereas a triangle would always have, like, even though it's a strong bullish push or a strong bearish push, but it will always have a lot of corrections leading to the final consolidation here. That is how you can identify them, but we'll cover it as you continue in the lesson. So bilateral patterns, we will first start with our ascending triangles. So ascending triangles are often referred to as the rising triangle because of this rising nature here, or the higher lows continue to go higher and higher. So that is how. And then please do not confuse this with your pennants. We covered pennants, and in the previous video where we cover pennants, we covered differences between pennants and triangles. So do make sure that you check that video in our channel. So the ascending triangle is characterized by a rising lower trend line and a flat upper uptrend line, which is this resistance here, and this is the rising support or your higher lows up here. So this pattern indicates that the buyers are more aggressive than sellers as price continues to make higher lows. The pattern completes itself when price breaks out the range. Yes, you can see here there's your higher lows, which show you that this is a bullish trend, but there is a strong resistance here which is stopping the bulls, and this causes your range here or your consolidation. So the market can break out either side depending on whether the bulls have enough momentum to break here, or the bears, the bulls lose steam and the bears take over and push the market down. So how do you spot this wonderful pattern in the chart? So the uptrend, the market must be in an uptrend before the ascending triangle appears. Not always, but this is more common. So this is important and emphasizes that traders should not simply trade the pattern whenever the ascending triangle appears. You have to always make sure that you're not looking at a wedge or a pennant. So the ascending triangle starts to take on its form as the market enters the consolidation phase, which is that struggle between the bulls and the bears. So the rising lower trend line, while the market is consolidating, a rising trend line can be drawn by connecting the lows. This ascending trend line shows what the buyers are slowly pushing the price up, which provides further support for a bullish trading bias. We'll continue to see this as we continue to break it down. So flat upper trend line. The upper trend line acts as resistance. Price often approaches this level and bounces off until the breakout eventually occurs. So the trend continuation, after price posts a strong break above the upper trend line, traders will look for confirmation of the pattern via continued upward momentum. Again, I say sometimes it will be the opposing because this is a bilateral. It is a bilateral pattern, so sometimes it will go the opposite direction. That's how it is. So you always have to have that in mind while trading this pattern. So how do you trade this pattern? The pattern is traded mainly through breakouts, but depending on the size or range of the pattern, short-term trades can be placed in range in line with the main trend. This is my own thing that most people believe in trading this pattern via breakouts, but I will explain to you why I trade it also through in range. I explained on the two previous videos also the advantages of trading in range in some patterns as opposed to just waiting the breakout. So do make sure you check those videos out. I will not go deep into it in this video because I want to make it as short as possible. So let us go. Okay, so the pattern creates a lot of false breakout. This is highly common in the pattern. It creates a lot of false breakout. It is very, very common. So this is how your ascending triangle will look like. You see, this is the support line which is converging with the flat upper trend line, but this one is usually straight. This is your resistance, this is your support, this is your higher lows, and this is the flat resistance that is formed that is actually preventing the bulls from making a breakout. So you would see it with, here's the main uptrend, and then this is your consolidation, your rising lower trend line, and your flatter trend line, which is your resistance and your support. That is how it will look like. So I explained that you can also trade within range as opposed. I always say some patterns just waiting, especially when it comes to triangles, just waiting for just waiting for a breakout. You can miss out on some opportunities, but only do this looking at the range. The range must be at least wide enough. If the range is not big enough, then don't go for in range trading on this pattern because it contracts, meaning that as it continues to form, it limits or decrease your profit, so it is not worth the risk. So if the pattern is big enough, because triangles sometimes can form and they can take days, sometimes it can take weeks, unlike your wedges and your pennants. So triangles, they usually are longer term, but they can appear in all time frames, but most of the time they are longer term, meaning they can take long. So just for you waiting for the whole week or 2 weeks, depending on your trading strategy, waiting for 2 weeks just for a breakout, it is not worth it. So you can do in range. How you do it, this is my own way that I'm showing you. You can obviously merge it with yours or use it, don't use it, but this is my way and it has worked for me many times. When I trade it in range, especially for triangles, I go for the prior trend. This was an uptrend, so I will focus more on the up movement within the triangle. What do I mean? Look at this move here. So I would rather go and buy this move here and place my stop loss around this zone here, meaning I'm using this support as my cover in case when this breaks, because remember this pattern has a lot of false breakouts. So instead of trading this side, I will wait for this to form and then I would go for the up movement here again and place. So it gives me a nice risk reward ratio. It gives me a cover here, and then I will take and I will trade it with a trail stop. So it goes, and then I will wait for this final step here, and then I will wait for the confirmation. This is what you're going to cover now of how you go for your breakout. So this is my two ways that I do it. I would trade it in a breakout, and then I would also trade it in range, but this depends on the size of the triangle. If it is too thin, it is not worth it, then I will not do this because it will most likely break out too soon. But if it is wide, it means that this triangle will continue and it will take some time. So let us look at the breakout, which is what most people trade. You can see here you have your flat resistance, and then you have your ascending support trend line. So firstly, please always make sure I trade it this way. I wait for a retest or a confirmation. This is your confirmation of a breakout, this candle here. So I won't just place, if I'm going to do a pending order, I won't just place it here. I'll firstly make sure I place it in a way that even if there's a retest, because these patterns have a lot of, if you've traded this before, they have a lot of false breakouts. So they will hit you with spikes. Like here, it's a shorter spike, but sometimes this spike can go around this length here, and then it will trap you and take you down. So I will wait for a confirmation. I will see this a strong bullish push here, wait for the next candle. The next candle shows me that it's a bearish candle. I won't go, then I will wait for a candle that will break the high of this candle. So I would go for this level here. After it is here and then I see it broke the previous candle here, then I would go and then place my stop loss below the resistance line, because remember now this becomes your support region. It was resistance before, it becomes your support, and then I will go below it and check the strongest support. After this, then I will go through this support here and I'll make it my stop loss. Normally, as we have covered in previous videos, that patterns or chart patterns will usually give you 1:2 or 1:1 ratio. 1:3, it is not very common. Most people, they would use this range here. I will show you why sometimes it is a disadvantage. They will use this range here as an output for a breakout, but it is not always the case. And I will show you this range. Using this range, you must always not just use it as a profit base. You must take into consideration your stop loss. So your stop loss is also included in this range. I think there's a mistake that a lot of people do. They just look at this range and they will look at this range as the only positive side, you know. So that is how I would trade this. And then let me just show you in another chart what I'm talking about. I took this on purpose to show you that it is not always going to break out on top. It sometimes will break out at the bottom. This is still the ascending triangle, but the breakout here happens at the bottom. We always look at this line. We see this as a pressure that will make sure that the market breaks out to the top side, but it is not always the case when you are dealing with ascending triangles. So you have to be good with your chart pattern and your price action. Look here, you see this candle here close below the support trend line, and then it pushed up again, so it rejected and it was accepted, but there's another rejection candle here which shows that the market will go down, and then after here it closed below But what happened? You found your retest. So sometimes in cases like this, always try to wait for a retest before you place your order. Wait for a retest. Here's a retest and a rejection, and then it shows you that now this retest here, it is now solid. The market will move, and then it formed another range here, which gives you your nice risk reward ratio, and you know where to place your stop loss, because this patterns, I repeat for the third time, they always have a false breakout. So it is always advisable to trade them with risk reward ratio or to trade them with your stop loss. Always apply risk management when you're trading your triangles. So let us go. So I would rather put my entry here as I explained after my retest, and then I see that okay, the retest here was accepted. The retest here was accepted as a retest, and then there is a candle here, and then it is here hitting the lows of this candle to show that we're going to have a continuous momentum downwards. And then I will place my stop loss right above here. You can also place it here, but just to be safe, knowing how this pattern sometimes operate, it can come again and retest here. So I would go and look at the last or the previous swing high of the candle, and then I would make it my stop loss. It still gives me 1 to 2 good ratio, and then I can go again, because you see here it went and retested this level again, and you got a little bit of drawdown, and the market came down, went for a retest, and continued to go down and hit our take profit. So this is how you would trade your ascending triangle. Now let us look at your descending triangles. As you see, they look the same, they are just vice versa. So a descending triangle is very similar in nature to that of an ascending triangle pattern. However, it occurs when the sellers are pushing the price. Unlike that one, it was when the buyers are pushing the price. So it occurs when the support of lows is a straight line and the resistance of highs is angled downwards. It is basically vice versa. So this occurs due to the sellers being able to gain some momentum but not being able to break the strong level of support. In the chart above, you can see the sellers are pushing the price. However, they are failing to break a consistent level of support. Rings a bell? That's what we experienced in the ascending triangle, but it was just vice versa. So as the price near the tip of the triangle, a breakout is bound to happen. But I want you to know that it is not always the case that the triangle will wait for the tip to break or the apex. It can also have a breakout around here. It happens also in the charts. Hence, it is always advisable to trade using risk management and putting your stop losses and your take profits. So in most circumstances, this breakout will be in a downward direction. However, this is not always the case. So therefore, you should look to place orders on either side of the two lines as you would for a symmetrical and ascending triangle patterns. So the pattern is traded mainly through breakouts, but depending on the size or range of the pattern, which we already covered, short-term trades can be placed in range in line with the main trend as demonstrated with the ascending triangle. The pattern creates a lot of false breakout. This is highly common in triangle patterns. That is why I keep repeating it, so that you are always aware of false breakouts. And then we covered the disadvantages of trading breakout or of breakout trading strategy on the previous patterns that we covered, that you can see how a breakout pattern can sometimes catch you using a false breakout, and we cover how to look out for those things and then how to better protect yourself when you are trading them. You can clearly see here, this is your descending triangle, and then there you have your strong bullish push. And do not confuse this as a falling wedge. As you can see through this support here, which is solid and straight, it is not sloping. If it was sloping down, you can say it is your falling wedge, but we covered that on the previous videos. So here you have your initial bull trend, and then you have at least 3 support retests. There's the first, second one, and the third one, which is retesting this. And then you have your lower highs, which are contracting. This gives you a whole recipe for a descending triangle. Most people would sell here. This is what I covered. Most people will sell. They just wait for the candle to close underneath here. But you know, sometimes it is not always good because the market can always go down. Always wait after for this candle, wait for the confirmation. If you're not gonna wait for the confirmation, you can experience a drawdown which will push you again in the pattern, and sometimes can take you all the way here and hit a false breakout and come down. So you must always wait for a confirmation and a retest. You see here there was no confirmation, it went back in, and then you had this here trading on the range here, just trading on this support level, you see. So the best way to trade is around this zone here. Look here, you wait here for another candle to close here, and then here it is a rejection, but you can see that also it rejected the retest, and then it traded on this range here, went again for another retest and continued to going down. So it also give you room for your stop loss, which you can place just above this swing low, this swing high, I mean right here, you see. So even if you entered here and then you put your stop loss around this zone here, you would still be safe, but sometimes it can push to test this resistance line. It can do that. So it's always safer for you to continue to at least have two ranges, like 1 and 2. I have my range here, which will be my cover, and if this breaks, I'm going to have another one here. You see that? So at least I have two levels that needs to break before my stop loss hit. Remember, in the previous videos I'm teaching you how to place a stop loss in the videos that I did, because placing a stop loss is also a skill. You don't just place it anyway. So do make sure you check in the channel for the previous videos that can take you through how to place a stop loss and how to, you know, trade and limit your losses. So that's how you trade this pattern here, and this will give you a nice profit. And then here you will be out around here, still gives you 1:2 or 1:1 risk reward ratio. I said most people will look at this range here and then aim it as the output, but remember this range here, you must always put in consideration your risk reward method. So that is how you would trade your ascending or your descending triangles. Let us just go through a quick recap on what we have covered. So the descending and ascending triangle chart patterns can be combined with your preferred trading strategy. It's always best because sometimes you can apply indicators into checking when your next breakout will be, looking at the volume, looking at your stochastic, your RSI, or looking at your bearish what they call that, your bearish power indicator or your bullish power indicator, which shows you basically the volume. That's what you can also do, but you can also trade this with just price action without actually applying indicators like what we just covered right now. So once you learn to identify them, which is the main thing, identify which pattern it is, identify which triangle it is, and train your eyes to see them in real time, it will help you to better understand price action. So the supply and demand imbalances inside the descending triangle reversal will almost always generate fast and furious breakouts at times. So the limitation of triangle is the potential for a false breakout. There are even situations where the trend lines will need to be redrawn as the price action break out in the opposite direction. So no chart pattern is perfect. We all know that. We covered that in the previous video. So if a breakdown doesn't occur, market could rebound to retest the upper trend line resistance before making another move lower to retest lower trend line support levels. Remember, every time that contraction happens, that is actually a breakout try. The market is trying a breakout, but because of the indecision of the market, you find that contraction in the pattern. So an ascending triangle occurs when there is a consistent resistance and the support of lows is angled upwards, and a descending triangle occurs when there is a consistent support and the resistance of highs is angled downwards. So we have covered the ascending triangles and the descending triangles, which is our bilateral patterns. We have just covered them, which we will only be left with our symmetrical triangle, which will bring us to the end of our series, So I hope if you enjoyed this video, if you liked the material that we covered, please give us a thumbs up and then give us a like so that it can push this video so that whoever or the next person can also benefit from this information. I believe and I trust that this has impacted you. I believe and I trust that you now have a clear understanding of how to trade the ascending and descending triangles. On our next video, we are going to cover the symmetrical triangle. And if you want to become part of our team, simply check the screen. We have different packages where we offer signals, and do check the website, which is right above me, where you can find courses. We do blogs there where we cover some stuff that you don't cover on the video, where you can read through some other materials, and we do have wonderful courses. So we do have wonderful packages that we offer. If you want to trade or want to become part of our team, you can join our Telegram group where we have free signals and we have free information. The link is in the description. You can check out the group right here on the screen. Just make sure that you join and become part of the family. If you want something more than that, or you want more signals, you want to go in depth, we have different types of packages. So make sure that you do become part of the family. And I have great news. We are launching, maybe when you watch this, I don't know when you are watching it, but we are still launching our best EA to ever hit the market. It is just unbelievable. I'm going to make a video where I demonstrate for you when the time comes, and you can see the results and can see the back testing results. You can see the live results. You can see the performance of the EA. So far it has been unbelievable. I'm not lying when I tell you that I've had sleepless nights out of excitement just being excited about this, because it has also blown my mind away on how it is performing. You know, it is performing so well. The EA will be available very soon, and I will give you more details. So make sure you do check out our website for any updates, and do hit subscribe if you did not yet subscribe to this channel, and then do check out the upcoming videos because you need them. My name is Muhomutsi. I also go by the name Alpha Wolf Forex, or you can simply call me Proqnosiz. It is always wonderful to be with you. It is always wonderful to share information with you, and this channel is all about self-improvement. We are all about improving together. So do hit us in the comment section. If you have anything to add, do hit us in the comment section. If you want to say something, I will surely get back to you. Check out these videos that are coming up, and then continue to check videos in our channels because they're good for you.